Welcome to Biztech's Investor Conversation Show. I'm Jeffrey Halley, and today we have Charlie Robinson, Chief of Human Capital and founding team member of Wolfpack Funds Management. Wolfpack Funds Management is a Singapore-based venture capital firm, and it's focused on helping early to mid-stage startups within the consumer, media, and leisure verticals. To tell us more about the Wolfpack, welcome to the show, Charlie.
Thank you very much, Jeff.
Thanks very much for coming along. So let's just get straight to it. Tell us more about the Wolfpack itself. It's got a very interesting name for a venture capital firm. We have to be honest here. And also tell us more about your role within that business.
Yeah, so the Wolfpack itself, I mean, we have had the idea for this business, and the founding team has had the idea for this business for 10, 12 years. A lot of the guys within the senior team used to work together previously, and they'd gone their separate ways. But when they were in their previous company, they used to work very closely together. It was a company where it was quite hard to communicate across different verticals within the business. They all did it very effectively, and all their careers kind of prospered through that. I wasn't working with them then. Actually, funnily enough, my wife was working with them, and that's how I got to meet these guys many years ago. So all the guys that went off had their successful careers and wanted to come back and start a fund eventually. And it kind of came round to fruition. So at the time, I was working for a family office up in Hong Kong with one of the managing partners, Simon. We were doing sort of family office investments, strategic investments into businesses that could really positively affect the core business of the family. So that was luxury, consumer, some media, some leisure as well. When we started the Wolfpack, we continued to manage the portfolio companies for the previous employer. We've got a very good relationship with her and the team, and we still work closely with them, but we wanted to start our own fund. So we started with a really small tester fund of $5 million, and the Wolfpack came back together. And we launched. We made 3 investments with our first fund. That was it. And the idea about the type of investments that we do is that they are very specific in our markets, but also the risk mitigation can come into those early stage companies through our active involvement. The whole team is from operating background. We've all had P&L responsibility. We've all run companies, and which is, I suppose, quite atypical to the venture capital world, where you tend to get guys who come more from a financial background. We had to hire in the finance team to make sure we don't make bad decisions and we understand what we're doing. But when it comes to operating and running those companies, that was where our expertise was meant to shine, and it has done for the first fund. We made three deals. The fund performance after 2.5 years at about 6.5 times return for our investors, and we're sort of launching our second fund at the moment. So we have our anchor investor nailed in, and we're just closing the final parts to that. I hope that's okay as a quick description.
No, that's wonderful. Now, you're listed as the head of human capital. Can you perhaps describe in a little more detail what that impressive sounding title means within this context?
Well, it really comes from my background. So I wasn't always in the VC space. I started my career actually in executive search. I worked through some big firms over the years and set up my own business, which I diversified into exec search and then consulting. The consulting part was really more focused at VC and private equity firms. And what I'd do is sit with those guys, look at the deals they were doing, and map out the availability of talent for the portfolio companies as they wanted to grow them. And that ended up being part of the deal cycle with a couple of the key clients I was working with. I also did some consulting to bigger companies, like I did the Dyson South Korea office launch. I worked with Lazada and Alibaba for 6 months, looking at sort of leadership hires and structure around that business. And then after that, sold my company and exited the business and decided to try something new. I reconnected actually with Simon, who's one of the managing partners here. Funnily enough, both our wives were pregnant at the same time, and they knew each other. And we were doing baby training day together. So we were sent off to learn how to look after kids and how to swaddle. Me and Simon got quite competitive over this. And we just got talking again and reconnected a bit. He's someone I've known for a long time anyway, but we spoke a bit more this time about work and business and what he was doing. And that was the time he was in the family office. So the idea was I would join him and then, in the same respect, work with portfolio companies, helping them to map out availability of talent and growing them, and looking at how to also bring these businesses into the core family business in the retail space. My job sort of changed over time. So I started with that 6 years ago when I stepped into the investment world. I started focusing a lot more on deal origination, execution, growth, and then leading up to secondaries and exit, which is what I do now. So although I'm Chief of Human Capital and I do partner our portfolio companies closely on what they're doing, how they're building their team, I also look at bringing in additional fundraising, looking at long-term planning for exits for those companies as well.
So the Wolfpack itself is perhaps slightly different to what other VCs are perceived as, in that a lot of the VCs that we come across in everyday life seem to be very focused on global scale tech startup spaces. But you're quite different here. You're focusing on consumer, media, and leisure verticals, much more of perhaps a D2C outlook, so to speak. So what are your aspirations for the Wolfpack within these verticals?
So it goes back to how we started it. So when we looked at venture capital and wanting to run and set up our own fund, we tried to think about it quite pragmatically, is what would be the best solution to what the companies we're looking to raise. So every venture capital firm will say they are value add and they will work with those companies, and a lot of them do a very good job at that. But it tends to be more on just purely really the financing side and maybe some top line strategy. Whereas what we wanted to do was solve the problem which a lot of early stage companies have, which is a limited team, and having a bigger team with us that those businesses can tap into. So we are not experts in tech and fintech and crypto and blockchain and Web3, so we don't really touch it. We can't affect change within those businesses. We can't advise them and help them mitigate risk as they grow. So we don't look at it. In the future, as our team builds and develops, that might change, but we look at our core competencies when we make any investment. And that was really the reason for those three verticals. But they're not siloed. What we're really looking at is the convergence of media, consumer, and leisure. And we see that across the portfolio companies that we're working with now, the deals that we're looking to do. And we're looking at businesses that are pulling them together and actually building community around their product, their brand, or their offering through I suppose clever marketing, consumer engagement, and also on the product side, genuine products built by either technology or craft. So the technology side will come into maybe some of the product development we look at in skincare, for example, as opposed to the tech, which I think you're referring to for the majority of VC firms.
Could you share a success story that you've had with one of your investments, and perhaps tell us more about the factors that contributed to that success?
So I think probably the easiest one for me to talk about would be the first deal I brought in, which was completed by the Wolfpack, which is a company called Maison 21G, Singapore-based bespoke fragrance business. It's an amazing place. You go in and you essentially go through a creation experience where you go in and you build your own customized perfume with one of their creators. Then they do the bottle for you, they label it, and actually they engrave the bottle for you. It's brilliant business. The founder, and the reason I like that business initially, was she was such a deep expert in her space. She was leading international flavors and fragrances, which is a huge baseline producer of fragrances for the top tier fragrance businesses across the world. She was leading them in Greater China. And then she spent, I think, 6 years kind of developing this, I suppose, the line of products that could be mixed together. So you couldn't really make a mistake. No matter what you put together, you'd always get something that worked. And it's a luxury business. You go in, it's a luxury bespoke perfume business. But we went in and she had one shop in Duxton Hill, and it was brilliant, amazing. We loved it. We worked closely with her on developing the business strategy, the distribution, the manufacturing, the content, looking at partners in the market as well. And she's gone from that one store in Duxton to 2.5 years later having 15 of her own managed stores across Southeast Asia and the Middle East, 11 managed by third-party providers, 8 in travel retail, I think 6 online, and over 100,000 B2B connections as well, where she'll partner luxury hotels and creating a fragrance for them, for their VIP customers, and luxury travel, all that sort of stuff. And the business has just grown astronomically. So that Maison 21 is a really good example of a business where we can see and track our involvement with that company over the 2.5 years and how it's directly linked to the growth of the business.
And the Wolfpack, and of course yourself as part of the Wolfpack, you're dealing with early to mid-stage, post-seed, post-angel companies. What sort of traits are you looking for with founders of these companies that you believe are a signal of future success?
Okay, so I'll hit the first part actually on the deal size. Yeah, our focus is going to be, you know, 1 million to 4 million, around that sort of range for investment. However, because we're so specific on the companies we'll invest in and the risk mitigation that will come from our team, we actually give ourselves a bit of flexibility. So we can go very early if we want to, but if we do, we'd probably reserve rights for later rounds of investment, because otherwise it's hard to justify to our investors why we're putting so much time into a business with such a small capital investment. So we do have a bit of flexibility on that side. When it comes to the founders that really resonate with me, it's always domain expertise and subject matter expertise and really understanding the area or the product that they're creating or building. I'll give an example. I won't to the name of the company, but there's a skincare brand I've seen which I'm looking at as a potential investee business. It's been developed over 5 years by 4 PhD research scientists who understand, who all have PhDs in microbiome and interaction of product through skin microbiome. And they've actually built a new peptide by refining 800,000 amino acids. And this new peptide is the first and only product in the market that removes senescent cells from your skin, which cause aging, wrinkling, sagging. We looked at that product. We had our product tester who's used to be in charge of one of the biggest beauty businesses in the world as a chief product officer. She said it was the best product she's seen in her 30-year career. And then with that, we looked at then how we can build a story around that business. So the expertise of the product and the actual core company are very well covered within the business with their scientists. And actually, when it comes to building story and the storytelling around what they've done, that's where we know we can really help. So businesses like that I really like, because it has a good fit for us, and you have very strong core competency with the founders in their area of expertise.
Okay, that's very, very interesting. So there's no specific set of criteria that you believe that are an indicator of success, apart from the fact that obviously the passion and the knowledge that they have within their specific sector.
There are lots of different types of people who can be successful in this. I think when you try and categorize it too much, you're going to miss opportunities, because there's lots of people I've seen who, you know, are pure creatives. Like, they are amazing at what they do. And we know most people wouldn't invest in them because they haven't got that business mind, they haven't got the business structure and really not knowledge or really interest to even get more involved in that side. But we know we can do that. So we can help them with that. We can formalize, we can structure those businesses. But for me, it's about having core competency in your subject matter and subject matter expertise. And also, before we even invest in a company, we will spend quite a lot of time working with them, providing the support. And a big part of that is to see how they respond to it. We're not ever going to force ourselves into these companies and tell them what to do. These guys are the founders of the businesses. We're a support function. But what we do track is how they interact. What are they asking from us? Are they listening? Are they making changes? Are they just dismissing out of hand, or are they dismissing the right things and keeping the right things? And so we look at the interaction and the mindset the founders have, and we build up a working knowledge of them as founders of the business. When it comes to set criteria, and I know lots of guys do this, we don't sort of focus like that. We get operational and we work with the guys and we see how they are to work with.
So it's very much a dynamic work in progress sort of process, so to speak.
Yeah, and look, I mean, it takes a lot longer to make an investment because of this, and because we want to learn more about these guys. We also run the risk that we might work with the company, decide not to invest, and then they go off and, you know, use what we've done to be successful. But we come to the conclusion we don't mind. That is absolutely fine. What the risk mitigation and the understanding we get of the founders in the business through doing that helps our fund so much that we're willing to spend a bit of time with helping companies that we don't have active involvement with in the future.
Okay. So what emerging trends and developments in the VC industry are exciting you within the context of the Wolfpack Funds Management?
So I think when we look at how we set the business up and what's happening in the VC world, there are some similarities between a shift that we're seeing. I mean, historically, venture capital was predominantly set up by consultants and investment bankers who then stepped into the VC space and had that access to capital, sometimes through successful founders as well, if I'm honest, but a big chunk, especially in Southeast Asia, are more investment banker background individuals. And what we've noticed is those funds are tending to hire more operational guys because they're looking to add more value into their portfolio companies. Whereas when we started the business, we did it the opposite way, where we go, right, we're all operators. Let's hire a finance guy to watch what we're doing, help us on the construct of deals, make sure we don't make bad decisions, but also we're the guys who are driving it, and that's our safety net. So I can see the VC world changing, actually moving more towards how we operate, but starting from a very different position. It also works with people we engage with as our LP, so our limited partners, who are the people who invest into our funds. We've focused a lot on not necessarily the traditional fund of funds who are out there. We're quite early stage business anyway, so I'm not sure actually even if they'll be that interested in an early stage VC fund like us. But our focus has actually been very specific on key family offices who have core business in markets which can positively affect our portfolio companies. So look at our LPs have a mixture of retail distribution across Southeast Asia and North Asia. Our GPs are the same. And we're building a community of investors from an LP and GP perspective, us and our portfolio companies, to really help supercharge those businesses that we do invest in and give them that distribution, if it's a product-based business, set up for them as they launch into these markets. Also, what I'd say, we don't focus on Southeast Asia and North Asia for finding the deal flow. We look globally for deal flow. The idea is any business that has the potential to grow in our respective markets, we'll look at. And we see a lot of value add for European and North American businesses in particular, who are a bit scared of expanding into Asia and need some help navigating the market.
And rightly so. Off camera, before we started this interview, we were talking about some of your risk mitigation processes. Yes. Just as a final thought, I found that very interesting, your approach to how you do that. Just for some final thoughts, could you perhaps walk us through some of those processes that you use at the Wolfpack to mitigate risks as far as investing goes?
So when we look at any new business, obviously we have a very similar process to other VC firms. When we look at the financial model, we're looking at the performance of the business, we're looking at the engagement. If it's a product-based business, the customer acquisition cost, the lifetime value, all that sort of stuff. Yeah, we have a team of researchers who do that. Then what we do is we kind of split how the research and risk mitigation is done. So you have the technical guys who are doing that, and then you look at the value add. So then what we'd do is probably, if it was a deal I was working on, I may pick one or two people from the office with particular subject matter expertise relevant to this business. And we would sit down and start planning out how we're going to, I suppose, improve the chance of this business being successful as they grow if they take on our capital. We then start planning and start to action and start to talk to either the distribution partners or the potential people in the market who we know could have a positive effect, and our GPs and LPs. And we start driving that, and then we start engaging with that business on that process as well, while the rest of the due diligence is taking place. And we do separate it out. That's how we construct the deal. In all honesty, it also shows value add to the company we want to invest in. And from a commercial perspective, if they can see a value add, we would also get a better deal on investing because they'll want to engage with us. We don't push too hard on that, but that naturally happens through that process. So risk mitigation for those businesses would come through extensive planning, the beginnings of operating with that business into our respective markets. Does that answer the question properly?
I think it does, actually. I thought that was a wonderful answer. And because we know each other, I'm quite surprised you've managed to do it so well. So well done, Charlie. Yeah. Charlie, thanks so much for taking your time to be on the show today.
Thank you very much. It's great.
We've been speaking to Charlie Robinson, Chief of Human Capital and a founding team member of the Wolfpack Fund Management in Singapore. I'm Jeffrey Halley, and you've been watching and listening to Biztech's Investor Conversation Show. This interview will be on our website, www.biztech.asia, as well as our social media platforms. You can also see it on our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.